Alrighty, so in this video, it's going to be a part 2. I've got another video on this. I'll put these in a playlist so you can look at these later, but we're going to be back testing the macros. We may look at some PM session macros in the future, but AM session seems to be more popular. If you want PM session macros or say London session macros, we can go through that too. But here we go. So there's 2 macros for AM session. If this is the first video that you're seeing, the first macro is from 9:50 to 10:10 in the morning. And the second is from 10:50 in the morning to 11:10. All a macro is a window in time where you expect the algorithm to do something important. And we talked about in the last video, I asked myself like 3 things, right? Do we raid liquidity? Right? Is there a market structure shift? Or what else could it be telling me, right? So these are the 3 things I asked myself in a macro, because I'm using macros to kind of frame trades a lot of the time. Like if I can get a setup to form in that macro period, it's going to be great, especially if there's multiple confluences and I've got a clear draw on liquidity. So let's start from Friday, right? Now the first macro, working our way back, 10:50 to 11:10. That's 10:50 there. 11:10 is here. Between these 2 green lines, have a look. Take 10 seconds. Ask yourself these questions. I'm saying yes and yes to 1 and 2. So in this macro, we raid this liquidity here. So we raid liquidity, yes. Do we have a market structure shift? Yes. There's a swing high here. There's also swing highs here. Whatever you want to see as your market structure shift, yes. And what else could it be telling us? Well, in this macro, say these last 2 down close candles, they're also an order block. So you change the state of delivery when you go above the opening of this price. So we're going from bearish to bullish, plus we've now got a market structure shift to confirm that. And we've also left a fair value gap here, which is perfect. And that fair value gap lines up with these 2 candles, which are an order block. And we've already respected this bullish gap. So I'd be looking for longs here. And that's in that second macro period from 10:50 to 11:10. But you can see how it sets up the trade for you. Now, even though that's slightly after silver bullet, that's completely fine. As long as the setup forms in silver bullet or within that macro, you're sweet, right? So that could have been one. Let's look at the previous one now. Let's look at the 9:50 to 10:10 macro. So let's go and get our 9:50 chart or our line here, and then let's get the 10:10 line as well. Now this is the first time I'm looking at it for this week. Like obviously throughout the charts, if I was trading, then I'd be looking at it too. But like in terms of going back, we're doing this together. So 9:50 to 10:10, what do? Do we raid liquidity? No. I mean, we do technically raid this internal swing high here. So let's say internally we raid liquidity. So I'm going to put some text here and say internal sell side liquidity raid, right? We don't really raid like external liquidity, but we raid internal liquidity. And this was generated from 9:30 to 10, right? Internal liquidity. Is there a market structure shift? Debatable, but you may class this as a market structure shift with this displacement candle, right? So you may class that as a shift when we displace lower. Would I say it's extremely strong? Not really, but you can see we do end up pushing lower. But what's important here is number 3. What's price telling me? So in this macro, there's this bearish fair value gap. So what price is telling me is that we've returned to a bearish PD ray. We've started to displace lower. So potentially we may be looking for further sell side targets until we can look for a long position. That's what it's telling me. It's telling me here that we don't want to go up yet. We want to go down. So let's say you missed that because you could have entered from there, or maybe off this order block, these last 2 up close candles. You may have returned to an order block here and then entered short. If you missed that, right, then you could just wait for this. Even though this kind of fizzled out, there's usually at least 1 opportunity, sometimes 2 that you can take advantage of. So that's that particular day. Obviously Friday after, Thanksgiving is often a bit choppy. Let's go over here to this day, which I think this was Thanksgiving, but let's still do it. So let's put a vertical line at 9:50 and then let's put another one at 10:10 and see what happens in this time frame. So do we raid liquidity? Yes. We take out this swing low and this swing low, relative equal lows. Yes, we do raid liquidity. Do we get a market structure shift? Yes. We push above this high. And technically that's a swing high here. We close above that with a body. And what else is this macro telling me? Well, it's telling me here that we've taken out some important sell side liquidity. We've had a market structure shift. Maybe now would be a time to go long or look for opportunities to go long. So that's how you use macros again. And there's your bullish fair value gap. See that? And you could enter from there. If you didn't like that, that's completely fine. You could have entered from this bullish fair value gap, which is fine. So you got two potential opportunities to go long. Where do you target? You target this high. Now what that's called, it's called an opening range high. Opening range meaning 9:30 to 10 o'clock in the morning. So that's your opening range high there that you can see. This here could also be a high that you target, right? And that's completely fine, but that would still yield you enough of a risk to reward. Let's now have a look at the second macro, and let's have a look from 10:50 to 11:10. Now they don't always do things, and if they don't do things, I heard ICT mention this, it might have been in a previous video I watched. He says just sit on your hands. If they don't do what you want it to do, then just be cautious. Sit on your hands because you really want those macros to provide something. Now, in this macro, what do we do? Do we raid liquidity? Yeah, we do. So we take out this swing high, which is good. We also tap into this fair value gap here, which is cool. Do we have a market structure shift? I mean, technically there's a swing low here, so you may class that as your market structure shift. Fair enough. And what else is it telling me? It's telling me that potentially we may be wanting to head lower. Now, what else do I see in this macro? I see this bullish gap from this candle's low to this candle's high. I see that disrespected. You know what that becomes? It becomes an inversion fair value gap. So I see price pushing past and potentially returning to this inversion as a point of entry, which also lines up with this bearish fair value gap. So that would be an entry point that I'd like to see price return to. Now, if I get my Fibonacci, this swing high to this swing low, notice, and I'm just going to get these 2 points up too. Notice that part of that bearish gap and part of that inverse gap line up with the equilibrium or above equilibrium in the optimal trade entry range. So you could set an order to go short right on that 0.618 level, stop loss above that swing high, and your low hanging fruit would be this swing low. You could take that easily, right? Obviously, you're not trading Thanksgiving. You can see what happens here, right? Later on, right at the next day opening, but early day, early session. So you could have taken some low hanging fruit there. That's completely fine. But that's what I see in that macro. So you can kind of see how macros can be used, right? Let's do maybe a couple more days on the AM session just to kind of see what we're working with. But you'll see this if you tape read it and you do it yourself and you have a look after, or even during the moment, have a look. You'll see these things play out. So 950, what have we got here? That's 950. So 950 is this candle. 1010, let's get this vertical line up. 1010. Do we raid liquidity? No. Apart from these swing lows here, right? Do we raid like London session lows or Asian session lows or previous day lows? No. But we do raid some liquidity when I look back at that now. So we do raid liquidity. Do we have a market structure shift? No. I don't see any shifts here yet in that time frame. So the way I'd kind of see this macro is, okay, we've come up heaps. We've swept, and I'll just zoom out a bit, we've swept liquidity on the buy side. Okay, this macro is going down now. We've taken out a bit of sell side, but what else is left? All of this trendline liquidity here is still left untouched, and London session lows have been left untouched, which would be a drawn liquidity. So you may want to go short, but before you go short, you know what price has to do? It has to go up. So price has to go up before it can then go down, which we'll talk about. So this macro doesn't really do too much for me. So that macro I wouldn't really use, but obviously, you know, you can see here you've got a market structure shift, fair value gap entry here. Right, that's your fair value gap. This up close candle is a breaker block, a low, a high, a lower low, a higher high. So you've got a breaker block here with this green candle, which I'll put out in time. You've got a bullish fair value gap, and I'm kind of mixing in these macros with potential trades you could take, right? So that's your breaker block. And I'll try to keep this video under 15 minutes. There's your bullish fair value gap, which I can extend out in time. Cool. Low, high, lower low, higher high. We have a clear market structure shift. we've got a clear change in the state of delivery. These down close candles, the last down close candles before the shift, they become an order block. So as soon as we break past the opening price of that candle here, we've got a change in the state of delivery. Plus we've got a breaker block. So you could have entered long from here, 1 to 2, long from here to target this liquidity, 1 to 2. And this is just an overview because I have gone through this in my TikTok, but just so you know, that's what you see there. And then obviously you've got the, if I go from this low to this high and I go across, if you entered here the second time, right, that there's an optimal trade entry range. So pretty interesting. Now let's go to the 1050 to 1110 macro, which we'll see what happens. So 1050 right there to 1110. And all I'm trying to say here is that these macros sit within the silver bullet. Do we raid liquidity? Well, yeah, technically we do. There's this swing low here, which is internal, so we raid liquidity. Do we have a market structure shift? Yes, we do. Above this swing high. And what else is this macro telling me? This macro, right? If I just wait till the macro's done, it's told me that, okay, we've already displaced up, but we've only displaced up a little bit to fill this imbalance. We've come back down again to retest this imbalance and this order block. So we're retesting it. The bodies, you know, give or take, are respecting this breaker block if I make that full, right? The bodies are respecting this breaker block. We're displacing from the breaker block and the fair value gap, which I might as well change to green because it's a bullish one. So for me, I'm thinking, okay, we've got displacement once here. We've got displacement again here. We're in a macro. The macro's left another bullish fair value gap, which is right here, right? And you can see we return into that gap, and here's another opportunity to go long, right? A little bit after silver bullet, but still fine. Stop loss below that low, targeting this swing high, right? Completely fine. 1 to 2 risk to reward, another opportunity, right? Now, these are the macros, right? So I think I'm going to leave it there, but these are the macros, and I'd encourage you to back test these. You know what I mean? This is what we're doing today. We're back testing these macros. You can see how you can use those macros to frame your trades. Maybe you didn't like this macro, which is fine. So you wait for this macro, and then you can still take a long position there. That's completely permissible. But these are your AM session macros. So if you have any questions, just leave them in the comments. But until next time, guys, I'll talk to you guys then.